Hi, welcome to another edition of Ask Spurrell CPA. Today we're talking about tax filing deadlines. I have Yahweh here with me again. So Yahweh, how was your trip in minus 30 today?
Oh, so bad. I'm just lucky to get to carpool with someone.
Excellent. So the quote that I have here today is from Jim Collins, author of Good to Great, one of my favorite books, is you must maintain unwavering faith that you can and will prevail in the end, regardless of the difficulties, and here's the big one, and at the same time have the discipline to confront the most brutal facts of your current reality, whatever they may be. So the statistic is, 50% of all businesses are out of business in 5 years, and 29% of them, of those failed ones, are out of business because they ran out of cash. So the story is we have business owners and their proverbial head in the sand. They're short on cash, and they think that delaying filing their taxes, to deal with constrained cash flow will end up, making their cash flow better when really it's going to actually make it worse. So it's really becomes to be a problem. They're avoiding filing their taxes. So Yahweh, what do you think are the questions that these business owners should be asking?
Okay. Well, first of all, what are the penalties filing personal and corporate tax late for one time and multiple times?
So it starts out let's start with the one time. So if you're late filing your personal or corporate taxes, it's 5% of the balance owing, plus 1% a month. Okay, so it's 5% of the balance owing plus 1% a month. Then if you're late multiple times, so the second time, so you're late, let's say you haven't filed for 2 years now. So now the first time is going to be that 5%. Year one is going to be 5% a month for a number of months, and the second time, even though this is your first time filing because you're 2 years behind, year two then is going to be penalized at 10% of the balance owing, plus 2% per month for every month until you file. So it starts to add up in a real hurry. So,
okay. What is the interest charge on the outstanding balances?
The interest, which is in addition to the penalty, so they're going to charge you interest. Recently went up from 5% to 6% here. So the interest they're going to charge you on the outstanding balance is 6% a year. That's the interest rate right now. It does change from time to time, usually kind of in conjunction with as prime rate rises. But it's 6% currently.
Okay. Why should you file on time even if you don't have the money to pay?
So here's the thing. You're going to pay the interest no matter what. The interest isn't from the date of filing. The interest is from the date you should have paid the taxes to begin with. So put that out of your consideration. You're going to pay the same amount of interest, but you can completely avoid the filing penalty by filing on time. So even if you don't have the money to pay, you can file. They're going to start calculating the interest, which they would do retroactively anyways. It's not going to change the amount of interest, but it can completely eliminate the penalty. So you don't have the money to file, you don't have the money to pay, so you file, you have the same interest anyways, but you've completely avoided the penalty, which often can be substantially more than the interest. Even just the penalties, 5% right away, right from day one. It's not 5% over the year, it's 5% overnight as soon as you're late, whereas the rate of interest is 6% over the full course of the year.
That's right.
Or filing late the second time is 10% plus 2% every month. Those rates are astronomical, right? So, even if you don't have the money, file, get rid of those penalties. Those are the significant balances, and just realize that interest is the same whether I file late or not. So,
right. Well, personal taxes. What are the 2 dates that personal taxes are normally required to be filed by?
So normally, if you're going to file your personal taxes, most everybody has an April 30th deadline, except people with an unincorporated business. They have to file by June 15th. So if yourself or your spouse has an unincorporated business, you can actually wait until June 15th to file. They start charging you interest from the tax at April 30th regardless, but you're not subject to any penalties if you have an unincorporated business, which you file in your personal tax return on June 15th. So April 30th for most people. So if you have a corporation, April 30th for if you have an April 30th if you have a corporation or if you're a regular taxpayer, and June 15th if you have a proprietorship unincorporated business.
Okay. How can the proprietorship filing deadline be a planning opportunity?
Well, sometimes the threshold for having a proprietorship is quite low. Did I shovel the driveway this year? and earn $50 at it. Is that a proprietorship? How significant is this penalty? Did we have any revenue that flew out after? And we can get into a little bit of a gray area, but it's not the significance that changes the deadline from April 30th to June 15th. It's did you meet the minimal threshold? Where you're conducting a business for profit and loss. Did you have any revenue from this thing? So sometimes getting into that June 15th filing deadline is maybe a little easier than people think.
Okay. When is the deadline for filing corporate taxes?
So your corporate taxes are due 6 months after your year end. So if you have a December year end, your corporate taxes are due June 30th. If you have a January year end, your corporate taxes are due July 31st. If you have a February year end, your corporate taxes are due August 31st. So it's always 6 months after the year end. The interest on the taxes starts to accrue at 3 months. So usually on corporate taxes, you have to pay in monthly installments anyways, but anything in addition to those monthly installments, the interest tax on at 3 months. But again, the interest is small, the penalties are big.
If you've never filed before, how can the right year-end date reduce penalties?
So if you have a corporation, some people come to us and say they're 20 months into their business. But let's say the first 10 months, there was no profits. So we know we're late. We're going to have to file 1 year late, but we haven't set a year-end date yet because you set your year-end. Some people think that their year-end set when they incorporate or when they call up and get that GST number the first time. That's not true. So your year-end is set when you file your first corporate tax return. So if you haven't filed yet, and this is your first time around, we can look at what was the period that you didn't make any money. And we make that your year-end number one, because then the penalty is going to be based on the balance owing. So if you didn't make any money, it can be 5% of zero. It's still zero, right? So lots of times you can strategize, when you reach profitability in picking that year-end to kind of eliminate any penalties that would otherwise be due.
Okay. What are the GST filing deadlines and how does it relate to the corporate deadline?
Oh my goodness. So this is my pet peeve. If someone is out there with the federal government right now, and if you're listening to this, your corporate taxes are due 6 months after your year end. If you are a small business corporation, you have less than $1.5 million in revenue, you're able to be an annual filer for GST. But someone in their infinite wisdom at CRA has said that even though you can file your corporation 6 months after the end of the fiscal year, some reason you have to file your GST return 3 months after the year end, but it's impossible to file your GST return without doing pretty much the same work that you have to do to file your corporate year end. So, and there's a whole team of people and thousands, millions of tax dollars that go into calling business owners up after 3 months and 5 days to wonder why they're not done their GST return. Well, they haven't had to file their corporate tax return for until 6 months. So if someone's out there some way and wants to eliminate a whole bunch of waste in our federal government and CRA, and this is my chance to rant on this topic, is make those deadlines align. You should have to file your GST year end and your corporate tax year end at the same time if you're a small business corporation with less than $1.5 million. And end of rant right there.
What is voluntary disclosure and how can this be used to reduce penalties?
Okay, so you're offside. You're offside, but CRA doesn't know yet. And I mean, they don't know. They haven't sent you a letter, because if they've sent you a letter or they've requested that you file, it's too late. But they don't know and you do, and you're worried that they're going to find out. So there's something called voluntary disclosure that we can often use to say that, hey, look, we're wrong, we're late here, but we're coming to you rather than you coming to us. So would you please accept this, and we'll pay the interest. You're always going to have to pay the interest. Don't try to get around that by delaying. You're always going to pay the interest. But we're coming to you before you found out, so can you get rid of the penalties? And again, those penalties are often bigger than the interest, so that's the key. You're going to pay the same interest regardless if you file the day after, within 1 day or 10 years late, you're going to pay the same amount of interest. The only thing you can affect is the penalties. So, and often with voluntary disclosure, if it's a filing that they're not chasing you for yet and you're willing to come clean on, we can get rid of those penalties by filing under the voluntary disclosure program.
Okay. What sort of payment plans can be made for GST, personal and corporate arrears?
Okay, so GST is a little trickier because they view GST as a trust account. It wasn't your money to begin with. You know, you had to collect an extra 5% over and above what you normally charge the customer. Of course, you get to deduct any GST that you spent in delivering that product or service, but ultimately they view it as a trust account. So the default for them is 3 months. They say it's a trust account. You can get longer payment terms, but you're gonna have to jump through some hoops to get any longer than 3 months, and that can be an uphill battle to get any payment plan for longer than 3 months. When it comes to personal or corporate arrears, generally we can get 6 months, and generally we can get 6 months without too many hoops. That deadline's always changing. I don't make the policies at CRA, but getting a payment plan of 6 months on their for arrears personal tax or arrears corporate tax, 6 months is generally easy enough to get because they have a little more flexibility, because they realize that people don't always truly understand their personal tax and corporate tax liability because it's based on income, and they're not sure how much income they should have had until the end of the year. Whereas opposed to GST, they know you've been collecting more of that balance each and every, more than what you charge for your product or service on each and every transaction. So they think that you should have that money aside. But personal and corporate taxes, they take it a little bit lighter, and I don't want anyone to think they take it lightly, but generally we can get 6 months of a payment plan. We can always get longer. I shouldn't say always. There's always the potential to get longer, but it can be an uphill battle, and there's generally some hoops that you're going to have to jump through, and real significant disclosure, turning all of your bank statements over, business and personal, to try to get longer payment terms, but it can be done. So there is a light at the end of the tunnel. And, the most important message is to know is that you start making it better as soon as you file. Filing does not affect the amount of interest you pay. The amount of interest you pay in the end is always going to be the same. Just the quicker you file, the less penalties you're going to pay, and those penalties are usually more significant than the interest, and sometimes you can get completely out of them just by filing on time or filing before they come looking for you. Mm-hmm. So I think that's what we have here today. Thanks again for joining us. Please hit that like and subscribe button so we can continue to give you tips on how to beat the odds at business. And as always, if you have any questions, put them in the comments below, and we'll address them in future videos. Thanks very much.